Welcome to Trading Lounge and the S&P 500 for the 15th of May. Just starting on the monthly chart here, this is pretty much what we're looking at here from wave 4 here to wave 5 up this area through here. And we've been through this expanded flat correction for wave 3 here, an A wave, a B wave and a C wave, and now we're starting the journey to the upside here. So let's move to the weekly chart and just have a look at this expanded flat pattern. So wave 3 here, an ABC for the B wave, and down for the C wave for wave 4 here, and then we're looking up for wave 1 here, and we're looking for wave 2 to pull back. In fact, wave 2 may already be completed already, so let's just check in here. So we were looking at two targets here. We're looking at our 1, 2, 3, 4, 5 up through to here for wave 1, and then we're looking for a 3-wave counter trend as an A and a B and a C for wave 2. I know wave 2 normally pulls back to the 61.8%, which is down here, so I need to be a little bit mindful of that. But the point is that wave A here was really quite short. So wave A here and wave C will have some sort of equality. So it's quite possible that wave C is already in play here for this. So it would look a bit like this here. So the A wave and the C wave have got some sort of equality here. So the market can move up from this point. We know that if there's going to be a problem, it's going to be a problem at the 61.8%, and I will explain that in a moment. So that is, well, that's the old this second. Let's just move that. So if there's going to be a problem, it's going to be in this box here, but otherwise we should, once this top here becomes the support area through here, then you know that then we'll be heading up from that point at that stage. But if there's going to be a problem, it's going to be a problem in this box here. And the problem would be that this count here would not be finished. We would end up seeing this down. Let's just have a look at the bearish count for this. So just go to this 2-hour chart here. We talked about this yesterday. So we'd look at this here as down for 1 here, back for 2 here in this box at these old highs here, and then down for 3, 4, and 5. Bringing us lower into this area through here. So it's possible, it's just that this has equality here already. So we'll go with this being in place here at the moment, and we'll look to go higher. But as I mentioned, we really need to see, well, this box as the support, the tested support, and also the 29 would help as well. So any trades that you do in here on the long side should be really quite small, and looking to build on top of the 29 and so on to the upside, because there will be, coming back to the 4-hour chart here for a moment, there will be plenty of room to build into trades up through this space here, and that's what we'll be doing. So very small positions in here and looking to build on here and going for the longer term up through here. So no need to panic and get in at the bottom here. It will be a feeding sort of process all the way through here. So just coming into the 1-hour chart, 15-minute chart here, we were looking, most of our trades were on the 15-minute chart rather than the hourly chart, but basically this is the pattern here of 1 ABC for 2 here, then 1 and 2 in here, and 3 and 4 and 5 here for the 3rd wave, an A and a B and a C for the 4th, and down for the 5th here. So now we're pushing to the upside here, and if we move, this is our problem area here within group 2, so that makes it nice and easy here. So if I go to the 15-minute chart to drill in on that here, so we're out of our short trades at the 2,800 from yesterday, and now we're building to the upside. Now, I don't really know how to label this. I know that that's in 5 waves. I know that this is in 5 waves. This is building into 5 waves. It still needs a little bit more here, but that would be 1 and 2. So we'll end up in here. But what could happen at that point? Then we could have an A and a B and a C coming back. That's roughly the 61.8% there, I'd say. And then moving up there from that point. So anything that's in here, you really need to keep the stop out of the way here and just have a very small position. Otherwise, you want to wait for the safe trade, then you'll need to see a 3-wave price action here, and then move in on the top here and start to simply, if you can't figure that out here, then build in on the 2900 as support and look to build in, you know, longer term all the way through these areas here, which we'll talk about as the market goes. But if the market's going to fail, it's going to fail from this top area through here and move down through here. But in both cases, we expect it to move down. The count up through here could be counted as 1 and 2 to this space here, or we could have 1 and 2 here, 1 and 2 here, and then going into a third wave here and just continue to move up and not pull all the way back through here. So if I just go to a tick chart, it might make a little bit more sense. So with the tick chart, this is the low here, so we can look at this as the first 5 waves here. So we can look at it as 1, 2, 3, 4. Probably not, because we've got overlapping wave structure. So it's more of a case of the other way around. Then we've got wave 1 here and wave 2 here, then wave 1 here, wave 2 here, and then we're building up here for 1. This looks like we've got 5 waves in here, so 1 and 2. And this is still building into 5. So we're going to continue to build higher through here. But this is the problem area through here. I mean, if you know, what we teach at TradingLounge is that you know, we want to be, if the markets drop below here, then we want to be on support of 2,800. So realistically, you should have trades in this area here on long trades, and you should also have long trades in this area here, taking new highs out here, because the market's sitting on the top of group 1, 2, and 3 here, make up subgroup 1 here, so being long on top of 8 as support. And the next step is to be long here. The next step is to be long here, but this is a classic trading levels pattern here as well, where we have the arrival, the reaction, the first high above the level, an ABC pattern, and then back up, so we can go along above this top and this top here, and this will be the same in this area here. But if it's going to fail, this is the area it's going to fail in here, as you know. But the funny thing is, I don't really see an ABC correction up here. So it looks more impulsive to me at this stage, especially if it has to fit within this 61.8% range here. And so I don't see it as being corrective at this stage. So it looks quite good. You know, these can be 1 and 2 and 1 and 2 and 3 here, because we've got overlapping here. We'll have to label it that way. So it looks like it's an impulsive structure that's going to move up. But look, what the hell do I know? What we do need to know is that once we're above the 61.8%, say the 2900 here, and we have support, then you'll know very clearly that we'll be going up from that point. So this is the tricky area here. So we've got to get past that. So we can only kind of, you know, just work through that. But it does appear that it's impulsive to this point. But that's the problem area here. And also, too, in terms of shorting this longer term here, you know, I would have, if it was going to crash here, then if I just put the 2-hour chart here for a moment, you know, we'd need to see in this space here, if I remove this here, we'd need to see, you know, quite a clear sort of ABC pattern in here, and that would have 5 waves in it, that would have 3 waves, and that would have 5 waves. So I'm not seeing that, you know, I'm seeing more of an impulsive structure continuing to build to the upside here. So anyway, I'll leave it at that, and you can figure the rest out. Okay, thanks, cheers.